Good morning, traders. This is Michael coming to you from Game Edge on Friday, September 12th with our pre-market prep session. As always, here at Game Edge, we'll cover our three pillars: sentiment, structure, and trend, as well as some individual equities. Let's go ahead and get started. We'll jump right into it with our market trend model. This is based on the tick index orientated. The bolded white CT is our intraday instantaneous cumulative tick. And as we discussed pre-market yesterday, you can go review that video. If we wanted to see the buying and the call speculators start to take back control of the overall market, we need to see the bolded CT start moving back above what we call our railroad tracks or our shorter term momentum moving averages. And we really saw that start occurring early on in the session, roughly from 10 o'clock to 10:30. We really started crossing above these shorter term momentum moving averages. And we started our linear up look in the cumulative tick. That's indicative of significant buying in the overall market. Up here, new highs versus new lows. Obviously, new highs expanding and outpacing new lows. And then the key metric I wanted to look at was the filtered cumulative tick, plus 1,000, minus 1,000 larger block orders. This is institutions as well as larger market participants. We started off roughly flat, just above the zero line, and you see this 45-degree angle to the upside early on in the session. Again, this is indicating significant buying coming in via institutions, so that got us in motion early on in the day. And then we were able to ride the trend all the way to the upside. As I spoke about yesterday morning, that we had a path to 6,600 to the upside. If the market wanted to go in that direction, the top of DS was going to be important. And that pullback in the morning, we really held right at the top of Drunken Sailor range, which is that low exposure area. And then we took off to the upside, took out the high of the day, and then saw everything falling into place with the market trend model. As well as our vol-m command. So go back and review that, kind of what we were looking for yesterday for a significant move to the upside, and all the pieces just kind of fell in place early on. Moving on to the tick RC, this is our quality tick. Obviously, this started moving to the upside very rapidly, and then again, you'll see our colored ribbon, which is our longer look back period, red above cyan, continuing with the positive slopes to the upside, as well as on the tick US. So again, all systems go there for a continued uptrend. Again, not without pullbacks within the overall bullish uptrend, but everything, again, continues to say that we're possibly going to move further to the upside. SPXA, this is our cruise ships. We separate the SPXA and the SPXP. We look at the SPX options market because it's the largest and most notional value. This gives us our 40,000 foot view of how institutions and larger market participants are positioning. Quick takeaway, I scrolled this off the page here, but as you can see, we're call dominated above and below spot price. One I wanted to point out was the monthly OPEX expiry. Obviously have 28% of the net GEX expiring next week for the monthly OPEX. So again, where that gets deployed will be important heading into Q4. You see the transition area now down here at 6,500. As long as we're staying above the transition area on the SPXA, we remain bullish. And then obviously this net delta column, you can just see it is green really as far as the eye can see. And then 6,600 is that key level to the upside as of now. But the call speculation is continuing to ramp up to the upside. So we do have the opportunity to continue to move higher via the looking at the SPXA. All right, we'll move on to the SPXP. These is our speedboats. Obviously, these contracts turn over much more rapidly via 0DT as well as weekly expiries. Again, call dominated above and below spot price. We do have about 29 or 30% of the GEX rolling off today for this expiry. So again, where that gets deployed will be important for the overall monthly OPEX and then into the Q4 timeframe. Again, 6,600 is our PGEX level. Again, that's going to be a difficult hurdle to overcome unless we see a significant amount of out of the money call speculation via our vol-m command and intraday volumetrics. And then staying above transition, pull back to 65, 70, 75. You see COTMP there also. So again, that would be a key downside level to watch for the full expiry for heading into today. All right, moving on to the SPXP GEX ratio. This is our game edge ratio. We talked about that negative slope that we were seeing pre-market yesterday with the overall pullback within the SPX. We wanted to see that repair itself and start moving back to the upside, which we saw. Again, this is spot price sensitive also. So as you continue to move up, you capture more out of the money call gamma becomes in the money, but the out of the money call speculation continues to move to the upside. Now we're reaching a GEX ratio of 1.89. So you can look across here historically when we reach these peaks of 2.3, 2.3, 2.2. We've seen at least some consolidation and pullback within the overall SPX. So we'll watch that. see if we reach any of those extremes. Previously, we had 2.1 there on the 10th. So again, that was kind of a peak area, and then we saw some pullback and consolidation. So we'll continue to watch this. But as of now, call speculators are in control. Out of the money call speculation continues to come in to the overall SPX structure, driving this ratio continued higher. So what the next thing we'd look for would be a divergence. You'd see SPXP moving higher with the SPXP GEX ratio or gamma edge ratio dropping, again indicating that out of the money call speculation starting to dry up a little bit. And then we'd be a little bit more cautionary for supportive type action as prices moving higher. But as of now, everything looks good, so we'll continue to monitor that. Delta balance, we saw the delta balance repair itself. You can go back and look at the previous video, but we did have the left-hand plane. We separate these in the left-hand plane and the right-hand plane, so it's below spot price and above spot price. And then the aggregate is the blue line, the delta balance, and as long as that is at 1, that's indicating call speculators are maintaining overall control. On the previous day, we did see this left-hand plane, which is the red dotted line, start diving down towards 0. That's repaired itself day over day. Again, this is spot price sensitive also, so as we move up, we capture more of those out-of-the-money calls. The only chink in the armor or kind of fly in the ointment is this right-hand plane, still with a negative slope. So we'd like to see that driving to the upside. Again, that's that out-of-the-money call speculation, but you also see the in-the-money calls below us continue to be supportive and positive, so any pullback should be an opportunity to get involved, as we've continued to say, really in this whole uptrend, as long as those in-the-money calls are maintained below us, and we do not see any monetization or closing or expiry and out-of-the-money put hedging start to come in, we're not really expecting any significant pullback. Now, we will get intraday price fluctuations and pullbacks to transition or bottom of drunken sailor range, and those are still overall constructive. Excuse me, within an overall call-dominated uptrending market trend model. And then getting projected on out in time for OPEX into next week. Again, still looks constructive. Delta balance at 1, really kind of steady as she goes, as we say. Speculation still has continued to be supportive into the monthly OPEX. All right, moving on to the SPXP net stack command. Again, high sensitivity levels for today. Obviously, 6,600, we've already pointed that out. Out of the money calls, if we get above 6,600, we'll capture all these out of the money calls. This positive delta going into our book obviously gets longer. Dealers will most likely have to hedge that as we continue to move up. Any pullback, 6550 is a charm level. Again, that would be supportive. Gamma 6550. Again, that would be the accelerator. If we did get below 6550 for a little bit larger pullback, then you see 6600. Not as significant as compared, but it is larger here with the gamma. So if we get above 6,600, as I said, that's a key sensitivity strike. This could provide some fuel to the upside. Then obviously this is the Vanna. If we see any increase in Vanna, or basically the VIX is fairly low, so we're probably not going to see much more drop in the volatility there. But again, any pullback should be supportive, even down towards 6,500 with a significant amount of in-the-money calls below us and positive delta supporting us. All right, let's move on to the SPXP 0 DTE. For today, call dominated above and below spot price. We're right at the top of drunken sailor range. Actually, okay, 65.88. So we're moving right into the top of that drunken sailor range. 65.85, 65.90 was an area that we were discussing within our overall Discord, as well as 6,600, that local peak there of the net OI of 7,000. So technically, we could have pulled the drunken sailor range up even higher, but we like this local area here at 65, 85, 90. If we get above that and 6,600, then obviously this could continue to drive us to the upside and give us the thrust to move up towards 6640. So we do have a path higher to 6640. Now you'll notice that there's a significant amount of net OI above us, so we're going to have to see a large amount of call speculation come in contract-wise to continue to drive us above these levels. But as we continue to traverse these levels and drive these out of the money calls in the money, again, that will just continue to support move higher all the way up. Now, not really thinking that we drive all the way to 6640 today. 6600 was a real possibility yesterday, but we'll see. Just a significant amount of overhead net delta, net OI, total OI here heading into a Friday. We may see the volume drop off rapidly into the afternoon session, so we'll continue to monitor that. Now, if we do get within the overall drunken sailor range, this could be extremely choppy. You see those low exposure areas, net OI, and you see transition down here. It would not be out of the realm of possibilities. to drop down towards the transition area, be stuck around in this area, and just chop back and forth depending on what the intraday volume metrics are indicating. Yesterday we had positive slopes on the call and put centroid, so we're very confident that we can continue to drive to the upside. Today may be one of those what we call crossed chopstick patterns in the volume command, where the call centroid just kind of drifts down, the put centroid drifts up, and you're kind of stuck between some strikes with low exposure. So we'll monitor that, post some charts if we can early on in the session, and see how that is playing out. So moving on, obviously areas that we'd be watching for today, obviously top of drunken sailor range, 6,600 is going to be key level. Pull back down towards 65, 67, COTMP, that'd be the bottom, of the drunken sailor range. And then we see transition there at 65.60. So moving over to the SPY, transition 658. Again, getting above that will be important. Previous day high, and then we see PGEX up there at 660. And then with the QQQ, staying above transition 0 GEX going to be important. And then we see plus GEX up there at 590. And IWM is really already being pegged at plus GEX COI at 240, which we discussed yesterday. So again, we might see some monetization and stabilization or some consolidation for IWM as we continue for the day. So we'll continue to watch that. And again, pretty much the same playbook as yesterday for all the Mag 7 stocks, which was interesting. RSP, IWM were significantly up yesterday. Mag 7 was actually negative if you look at all those aggregate wise. So if we start to get some flow in these Mag 7 stocks today, again, traversing up towards that 66.60 level, 66.50 may not be out of the realm of possibilities. So NVIDIA plus GEX has really not moved up much. We do see COI at 180, so you have a little bit of upside there. AMD needs to move across P-Trans. You see Apple P-Trans plus GEX. P-Trans here on Meta, again, staying above those will be important for a move to the upside. And you see plus GEX up there at 800, obviously not really expecting that today. You see Google hanging around P-Trans plus GEX, so you kind of get the idea that we're getting a little bit of stretch away from the overall structure, and could see some mean reversion back towards at least the plus GEX level as we see profit taking. And then that leads to that overall GEX ratio that I was talking about being kind of stretched up there at 1.8, can easily go to 2 or 2.2. But historically, that's usually where we see some overall profit taking within the structure. Amazon, P-Trans there, plus GEX 235, so opportunity to move up there. Plus GEX 510 on Microsoft, so really not much upside. So basically what I'm looking for is stocks that have the possibility of increased upside. And our core playbook is P-Trans to plus GEX, so any pullback to P-Trans, again, opportunity to get involved for a move back or towards plus GEX. We went over a few of those stocks midday yesterday that were on our scanners and indicating the opportunity for intraday possible trades. So you can review those. PLTR right at 165 there, so really probably not much upside unless we move up towards COTMC 172, and yeah, pullback for P-Trans would be the 160 level, somewhere around in there. So anyway, hope that helps with individual stocks. If anybody has any questions heading into today, we'll try to do a midday recap, hopefully as long as the schedule allows. But again, key area today, obviously 65.85, 65.90, and 6,600, and then possibility to move to the upside. If we're in the overall drunken sailor range, extreme choppiness, low exposure, driven by intraday volume command volumetrics. That's on our Discord, so make sure you check that out. And then the bottom side, we'd anticipate the bottom of transition to be supportive. If we did get below the bottom of transition, obviously we'd have a significant change most likely in the market trend model, and we'd indicate that 6,500, obviously just a round large level that would be supportive, and then the bottom of drunken sailor range at 65.25. But we'd have to have a large change, I believe, in sentiment and structure for us to have that big a move to the downside. So really not, that's really not in my overall thesis for today. So thesis would be stuck between the drunken sailor range or the possibility to move higher for the day. So, all right, thanks everybody for joining us. We appreciate it. Make sure you join us at gameedge.us. You can sign up for our newsletter here. Sign up there, put your email in, be on the bell, and this will give you a newsletter over the weekend for education, thesis, and how we use our tools. Make sure you check out our blog. This again has content that we've posted previously with the educational posts. You can review those. Then check out our free courses, Game Edge Fast Pass Flagship Options course. Again, sign up for that, all free. And then come check us out on our Discord. Great community of traders with extensive backgrounds, as well as new traders. And you can 14-day free trial, all the tools turned on, and we'd be happy to help you get up to speed. So thanks for joining us this morning. Everybody make it a great Friday and have a great weekend.